Hey everyone, and welcome back to the channel. Today, we read diving deep into a topic that many of you have been asking about. How beginners in the USA can potentially make money online through trading. Specifically, we'll be breaking down two popular methods, Forex and binary trading. We'll cover what they are, how they differ, how to get started, and most importantly, how to approach it all smartly. So, if you've ever been curious about the world of online trading, stick around because this video is for you. First up, let's talk about Forex. Forex stands for foreign exchange, and it's all about trading currencies. Think of it like this. When you travel to another country, you exchange your US dollars for the local currency, right? The exchange rate is constantly fluctuating. Forex trading is simply speculating on these fluctuations. You might buy a currency pair, like the euro and the US dollar, hoping the euro will strengthen against the dollar, and then sell it for a profit. It's the largest financial market in the world, with trillions of dollars traded every single day. It's decentralized, meaning there's no central exchange, and it operates 24 hours a day, 5 days a week. Now, let's look at binary trading, sometimes called binary options. This is a bit different. Binary trading is based on a simple yes or no proposition. You're not buying an asset itself. You're predicting its price movement within a specific time frame. For example, will the price of gold be above a certain price in the next hour? If you think yes, you buy a call option. If you think no, you buy a put option. If your prediction is correct, you win a predetermined payout. If you're wrong, you lose your initial investment. The outcome is binary. It's either one or the other, hence the name. It's often seen as a simpler, more straightforward way to trade, but that simplicity can also be misleading, and we'll touch on that more. So the big question, Forex versus binary, which one is better for a beginner? This really depends on your goals and personality. Forex trading offers more flexibility. You can hold trades for as long as you want, use various strategies, and your potential profit isn't capped at a fixed amount. However, it also requires a deeper understanding of market analysis, economic factors, and risk management. You have to decide when to take profit and when to cut losses, which can be psychologically challenging. Binary trading, on the other hand, seems simpler. The risk and reward are defined up front. You know exactly how much you can win or lose before you even enter the trade. This can be appealing for beginners who feel overwhelmed by the complexities of Forex, however. The odds are often structured in the broker's favor, and the all-or-nothing nature can be very risky. It is also worth noting that the regulatory landscape for binary options in the USA is very strict, and many offshore brokers are not regulated, which adds another layer of risk. For most beginners aiming for long-term skill development, Forex often provides a more robust and sustainable foundation for learning how to trade the markets properly. Alright, so you've decided you want to give it a shot. How do beginners in the USA actually start trading? Step 1 is education. Don't even think about putting real money on the line until you understand the basics. Watch videos like this one, read books, take online courses. Learn about technical analysis, which involves reading charts and patterns, and fundamental analysis, which is about how economic news affects currency prices. Step 2 is choosing a reputable broker. This is crucial. In the USA, Forex brokers must be regulated by the Commodity Futures Trading Commission, or CFTC, and the National Futures Association, or NFA. Do your research, read reviews, and check their regulatory status. A good broker will offer a user-friendly platform, good customer support, and fair pricing. Step 3, and this is a non-negotiable step, start with a demo account. Almost every broker offers a free demo account funded with virtual money. This is your training ground. It allows you to practice placing trades, testing your strategies, and getting comfortable with the trading platform without risking a single dollar of your own money. Spend at least a few weeks or even months on a demo account until you can consistently see positive results. One of the great things about the Forex market is that it's open 24/5, but not all hours are created equal. For US traders, there are specific times that are generally best for trading. The market is divided into 4 main trading sessions: Sydney, Tokyo, London, and New York. The magic happens when these sessions overlap, as this is when trading volume and volatility are highest, meaning more opportunities. The most important overlap for US traders is the London and New York session overlap. This occurs from 8 a.m. to 12 p.m. Eastern Time. During this 4-hour window, 2 of the biggest financial centers in the world are active. This leads to high liquidity, meaning it's easier to buy and sell currencies, and tighter spreads, which are the costs of trading. Major currency pairs involving the US dollar, euro, and British pound are especially active during this time. So if you have a day job, you might be able to trade for a few hours in the morning before work, or adjust your schedule to catch this prime time. Now for the most important topic of all, risk management. I cannot stress this enough. Trading is not a get-rich-quick scheme. You will have losing trades. The key to survival and long-term success is managing your risk. The number one rule is to only trade with money you can afford to lose. This is your risk capital, not your rent money or your grocery budget. A common rule of thumb for beginners is the 1% rule. This means you should never risk more than 1% of your trading account on a single trade. For example, if you have a $1,000 account, you should not risk more than $10 on any one trade. This ensures that even if you hit a string of losses, you'll still have capital left to trade and recover. Another key tool is using a stop-loss order. A stop-loss is an order you place with your broker to automatically close your trade if the price moves against you to a certain level. This is your safety net. It takes the emotion out of the decision and prevents a small loss from turning into a catastrophic one. Always use a stop-loss. Of course, beginners are prone to making mistakes. It's part of the learning process. One of the most common mistakes is overtrading. This is when you feel like you always have to be in a trade, so you start taking low-quality setups out of boredom or impatience. Trading is a game of patience. Sometimes the best trade is no trade at all. Wait for the high-probability setups that fit your strategy. Another mistake is revenge trading. This happens after you take a loss, and you immediately jump back into the market to try and win your money back. This is a purely emotional decision, and it almost always leads to even bigger losses. If you take a loss, step away. Analyze what went wrong, but don't let it cloud your judgment on the next trade. Finally, many new traders fail to have a trading plan. A trading plan is your rulebook. It defines what you trade, when you trade, how you enter a trade, and how you exit, both for a profit and for a loss. Without a plan, you're just gambling. With a plan, you're operating like a business. So let's circle back to the original question. Can you really make money trading? The honest answer is yes, it is possible. There are many professional traders who make a very good living from the markets. However, it's important to have realistic expectations. It's not easy, and the statistics show that the majority of beginners lose money. Success in trading doesn't come overnight. It comes from dedication, continuous learning, disciplined execution of your strategy, and excellent risk management. It's a skill that you develop over time, just like learning to play a musical instrument or becoming good at a sport. The potential is there, but you have to be willing to put in the work and treat it seriously. Don't fall for the hype of Lamborghinis and lavish lifestyles you see on social media. Focus on the process, manage your risk, and aim for consistent, steady growth. If you are struggling with your mental health, please remember that help is available. You can reach out to the National Suicide Prevention Lifeline or other mental health resources. Taking care of your mind is just as important as managing your trading account. And that's a wrap on our beginner's guide to Forex and binary trading in the USA. I hope this gave you a clear and realistic overview of what's involved. If you found this video helpful, please give it a thumbs up and don't forget to subscribe and hit that notification bell so you don't miss our future videos. Do you have any questions or your own experiences to share? Drop them in the comments below. Thanks for watching, and I'll see you in the next one.